What's poppin', family? Welcome back to another episode of Jared Tries Trading. I just got done recording a different one, but I forgot to switch screens on the OBS, so I gotta redo it. I said, fuck that, I'm tired, and so I'm brewing some coffee right now. And while I'm doing that, I'm gonna let you guys know what I'm gonna be talking about in this video. I was back testing yesterday. A couple trades didn't work out. I was feeling something. I was like, man, is this model worth it? Should I stick with it? Should I go chase what everybody else is chasing? And the answer is, yeah, I should stick with it. Because if you back test enough, you're gonna figure out whether or not you're gonna have an edge or not. But what's important to realize is your model is not gonna work year round. It's not gonna work every day. It's not gonna work every week. I've seen pros, in some podcasts and interviews, sometimes their shit don't work for like the whole summer and they gotta adjust. With that being said, we have to remember and figure out when does our shit work the best and when does it not work. Even when it gets down to the intraday, what kind of hints are there that we could find out if it's gonna work that day or not. And I'm gonna go through just a couple real quick things as far as my model, what I could have been paying attention to and what gives me the heads up that it might not be a high probability play. And it'll also cover the fact that risk to reward is pretty damn important, because one win could wipe out 3 weeks of losses and you'll be break even again. So we're gonna get all into that. I just got done brewing this damn coffee. Shout out to you guys, and I'll see you guys back at the screen. See ya. Let's get into it. Let's make sure we switch screens first before we fucking waste all that time. Fuck. All right, anyways, this is just gonna be a quick little banger. This is back in August. I was just running through the weeks really fast, trying to see if I could pick up on anything that's worth knowing. As you can see here on this Thursday, we did get a retrace, a high made in London and a retrace in New York session, but it didn't quite play out to where we were expecting it to go. That's just part of trading. That's just probability. And then it ended up going even higher and we would have been stopped out, if not by the price, by the time, because at Apex you can't hold on to trades past 5 or something like that. So we're not gonna pretend like, oh, we hit it at the bottom here, and we're just gonna pretend we got stopped out, and that's -1R. And like I said in the little introduction when I was making coffee, what kind of things, what's the context here that could have told me this might be a lower probability play? It's really just how the week played out, right? Tuesday, Wednesday, it's not perfect, but there's a high probability that by these days in the middle of the week, the high or the low of the week has been put in. So here we put in a low, here we put in a low, and we start doing higher highs. What's the probability on Thursday that we are going to make a new low? Now there's no guarantee. You never know what the fuck's gonna happen. It could very well tank down here, and that's what we were banking on right here. But it's a lower probability play compared to when everything, like the stars, are aligned for our model. Just right there, we could have avoided -1R. Just for argument's sake, we took that, right? Monday, nothing shows up. Tuesday, nothing shows up, right? And we're overall bearish right now at this point in time, right? Just quickly looking at the EMAs, we're bearish. So we're expecting bearish price action. And then we get to the Wednesday of the next week. So far, we only took one trade last week. We're -1R, and we get to the Wednesday. Now this looks like a better play, right? Monday, Tuesday, we put a high in on Tuesday. We're getting a continuation down. We're looking for expansion to the downside, which we did get. But look at how stupid. This is the market. This is trading. We put a high in London. We retrace, and it stops us out by like 0.5 points. Am I going to change my model to say we'll always add a couple points? If my backtesting says that a lot of times I get stopped out by the point like that, it might be something worth adding. Just that one example, I'm not going to change the whole model, right? So just a probability thing, got stopped out, and we should be happy at this point that our thesis played out. So -2R over here. Now we're -2R for the past 2 weeks. We're getting into the third week. Monday, we're eager to take a trade. We're looking for bearish price action. We get a high in London. We're hoping for the retrace and then an expansion lower. But why is this a lower probability play for this particular model? We have no idea if we're gonna expand lower or higher. We're chopping around the weekly open. Plain as day, obviously this trade didn't work at all. It's not only important to note what kind of warning signs and what kind of context we could put together to tell us not even to take the trade. That's one way of reducing your risk, right? I could be break even right now, not even -3R for the past 3 weeks if I had picked up on those signs. If you are just going to take the trade, it's important to use good risk management. You're not risking more than your account can afford. After 3 weeks, I'm still only minus 3R. Now you guys know the motto. If I'm going for 1 to 3 risk reward ratio, all it takes is one trade and I'll be break even. We wish we were fucking plus 10R, but that's trading. The very next day, if we assume the highs in on Tuesday, Monday gave us crappy price action, got some bullish price action. We're still looking for that expansion lower based off the higher time frames, weekly and daily. If we put the high here in London, we retest the high, didn't show a willingness to break it, now we could use this and the retracement back up into as an OTE entry. I can't look at the 5 minute, so I wish it could look a little bit cleaner. I'm sure there's a break of structure somewhere in here, or I'd hope there would be, or else I shouldn't be taking this trade. The logic of the trade and the framework is there though. The high of the week, if we're assuming it's in, we're expecting bearish price action based off higher institutional order flow, and we're looking for an expansion to the downside. I don't know if there's news, any catalyst, but this is the type of impulse move we're looking for when it comes to this model. My 3 to 1 hit easily, hit in about an hour. The plan is once I get comfortable and once I'm super confident in what days it's highest probability and I just get used to taking these trades, that's when it starts becoming a heavy hitter. You know what I mean? One shot, one kill. Yes, 3 to 1, it's a safe, kind of low hanging target. It could wipe out my other noob losses. 1 to 3, 1 out of 3 times. If you start scaling up and look at the potential of it, if I take out my first partial at this low or like different logical levels, the minus 0.5 standard deviation level, and have a runner, MES, ES, whatever you want. If this is 3 contracts or something, 25 points is our initial take profit. 50 times 25, that's 1250 just on one contract. If we take out 2 contracts, obviously times that by 2. Say take the first out and you leave a runner on, we're going to have to figure out some other exit strategies, but at a logical level could be down here at the -1, or we could go for a 200% move, which is, not likely, but that's why it's called a runner. That's 57 points times 50 on one contract. That's 2,800. So if you got out at at the 3% times 3 risk to reward, you're looking at 25 times 50. That's what, 1,250 plus another 3 or 2,800 or so from the runner. That's $4,000 on one play. You wipe out the losses and you're still profitable. Now that's if execution and everything is perfect, and you know how that goes. You're not really likely to execute that well if you're still learning, and like I am. Go through with your strategy, backtest, and look at things like this. What type of shit can you look out for to tell you not to stay out of a trade? If you are going to take a trade, make sure your risk management is on point, and that's something that the prop firm kind of route really teaches you. A lot of people talk about how it's like predatory and it's a scam. It's a scam because they have harsh ass risk management rules, and how many people want to do that? A lot of people treat it like it's a casino, putting on 10 ES contracts, and yeah, if you get lucky with that, all you need is 1 point. All you need is 5 points and you're fucking balling. You know what I mean? That's 20 racks or something. But that's not what I'm trying to do. If you're having success, just fiddling around on there and not really refining, or, you're just messing around, that's fine. More power to you. I hope you get your mama out the hood or whatever the case may be. But for me, I'm trading how I'm going to be trading forever. You know what I mean? Besides adding more tools and shit like that. But what I mean is, like a sniper, waiting for my setup, disciplined, not breaking from my rules. That's going to be a lifelong trading kind of framework, and plenty pros, plenty books, they all say that those things are key. So I'm trading how I plan to be trading for the long haul, and right now it kind of hurts because people are taking trades every day. They're winning, or they seem to be winning. They're not posting their losses, and I feel like I'm falling behind. But at the end of the day, You can't pocket watch. That's rule number 1. Put your blinders on, focus on what you can control, focus on your model, focus on your studying, and eventually, when it's time, and you'll reap the rewards. You know what I mean? So that's my little rah little rant at the end for myself, and hopefully if it helps you, leave a comment below. That's pretty much what I got for you in this video. Again, Apex Trader, 80% off. Try it out. If you're curious, it gets me about a Big Mac. So I appreciate you, man, giving me a meal for the day. Besides that, hope this was helpful. Until the next one, I'll see ya.